yesterday's session, I was just talking about the liquidity. That is, I was just using the name buy side liquidity as sell side liquidity. Of course, I believe by now you know what buy side liquidity is and sell side liquidity is. I said on every high of a pullback, there is some liquidity resting above it, and that liquidity is what we call buy side liquidity. And on a bullish scenario, of course, we will be forming pullbacks, of which the lowest point of that pullback, there is some liquidity resting below there, and that liquidity is what we call sell side liquidity, and that is in a bullish scenario. And in a bearish scenario, of course, it's sell side, buy side liquidity, because we'll be marking the highs, and the liquidity resting above is what we call the buy side liquidity. So this one here, since it's a downtrend, the pullbacks that price will be making or creating, of course, they are bearish pullbacks, so meaning we will be considering the highs of those pullback, because there is some liquidity resting above there, and that liquidity is what we are interested at. So right here, price broke the structure again here. This here was the recent one, and you can see price retraced, took that, and the high is protected. You can see price didn't go all the way breaking past our swing point, because if it did, this means now we will be no longer in a downtrend, but now we have shifted bias to an uptrend. So again, you can see price after making the break of structure, again the recent pullback, and I said the recent pullback, it doesn't matter, it can be created like before the break of structure, or it can form up after the break of structure. We will know in today's session, like the pullback or the liquidity resting above the pullback, or the buy side liquidity resting above the pullback that is formed before, the reset pullback that is formed before the break of structure, and the one that is formed after the break of structure. Like, what do we give the name to those buy side liquidities? You will know, and you can see I've already marked that in the red text. You can see this one here, I marked it as major inducement, and this next one as minor inducement. I will explain why I did that and all of that. Also, after the minor inducement, and I said, yeah, let me not talk about inducement first. So right here, price did the same, break of structure. Then after that, mark the recent pullback. Then the liquidity resting above that pullback is what I'm interested in, the recent pullback, that is. Wait for price to retrace as long as the high is protected, then reverses and breaks past the confirmed swing point that was formed after price has grabbed or taken out the buy side liquidity, the recent buy side liquidity. After price now reverses and breaks past it, now that's a valid break of structure, and this is a downtrend, and I said the same works also in an uptrend. All right, so in today's session, or in today's part, I'll be covering about inducement. I'll be diving more about liquidity, and I have a simple diagrammatic representation as usual. I actually believe that starting with the foundation, or starting with actually explaining, or like explaining using a simple diagram, builds the, or it's easier when you get into the real chart. All right, so right here you can see I have marked the title as inducement, and the abbreviation is IDM. So in whatever place you see IDM in True SMC, just know it represents inducement. Just like BOS, it represents break of structure, and CH or CH representing change of character. Right, so like I said yesterday, that once price, and this is a bullish scenario, you can clearly see price is forming anyway. This is something that I believe each and every one of you knows. This is actually the kindergarten of trading, but anyway, let me just cover it up for the sake. All right. All right, so like I said of the previous session, that once price has formed a valid pullback, and then price reverses and takes out that liquidity, since this here is a low, and I said on every low of a valid pullback there is some liquidity called sell side liquidity, and since that's the recent, then this means that this here is the one that we're interested in, and once price has taken out that, this one is a confirmed swing point, and if price reverses and breaks past this confirmed swing point, then this one here will be a valid break of structure. So that will be a break of structure to the upside. So now, all right, you know how to identify a break of structure, but can you also know like the uptrends and downtrends, when it becomes a downtrend, when it becomes an uptrend? And that's where now I wanted to dive in. All right, so like this is literally the simplest thing, or one of the most covered things on the internet. Almost every trader using any other strategy knows this. Like once price has, like you can see this kind of a format, like price is forming higher highs and higher lows. When you see such a format, this is what we call a buying, like a buying pressure, like, or just that an uptrend. When you see prices forming, so this one here is a higher high, this one is the low, assuming this one is the low, then price formed a higher high right here. After forming the higher high, retraced down, of course back to the range, right? So price retraces back to the range, and then after that it forms a, you can see, a higher low, because this here was the low, but now price has formed a low higher than the previous one, so this is called a higher low. Then another leg like that, so you can clearly see that we're actually bullish because price is actually rising. So you can see forming break of structures. Then after that, price retraces back to the range, forming a higher low, and you can clearly see this low is higher than this, and then price does that again, so making a break of structure, and this one here is a higher high. So you can see our previous higher high, you can see this one here is higher than our previous higher high, so this here is the recent higher high. So when you see such a pattern where price is forming higher highs and higher lows, this is what we call a uptrend, and not until the recent higher low is broken by, like, price breaks past it with some displacement, we are still on an uptrend, because sometimes price may just sweep that higher low, like in this scenario. This here was just a sweep, and price retraced back, forming another higher high, or forming a high right here, and making a break of structure. You can see this, these are like let me say equal, or this one here can be lower than our previous higher low, but in this scenario I'm also considering this one here to be a high, because this here is a sweep, and I will explain why I'm actually considering this, so don't mind. But the only thing that I wanted to showcase is that when you see higher highs and higher lows formed in the market, or when you see such a structure, just know that you're in an uptrend. And now when you see that price has, like, price breaks past the previous higher low with a candle close or with some displacement, then price will have made like a change of character, and this is a first signal that price is actually changing bias from being bullish to bearish. And right now we'll be anticipating that price will be returning back to our zone, creating a higher low, I mean a lower high, because this one here was the high, and now I was anticipating that price should create a higher high, so that we continue with the bullish trend, but now price created a lower high right here. So you can see price created a lower high, and when you see such thing, when price gets a lower high and then forms that break of structure, all right, don't know why this thing is taking a lot of power. All right, then price forms that break of structure right after it has created that higher high, I mean lower high. Then this one here is now even better, because it actually now showcases that we are now in a complete downtrend, and then the same price retraced, and then all the way here creates that. You can see this one here is lower than this one here, so this one here is what we call a lower low. This one is a lower low, but this lower low is lower than this one. So this is the recent lower low, and then price retraces back to the range right here. All right. So price retraces back to the range. Then after that, that's now a lower high that is lower than the previous one, and then continues all the way like that, breaking structure to the downside. So you can see in a downtrend, price is forming a series of lower highs and lower lows. So when you see higher highs and higher lows, that's an uptrend, and when you see lower highs and lower lows, that's a downtrend. And the first signal of a downtrend is after price breaks past the lower, like the previous lower high, higher low. Once price breaks that, then that's a confirmed change of character, and that's the first signal that price is changing bias to bearish. So this is actually the kindergarten of trading. You can see that I have not covered anything that is happening in between the impulsive legs or the corrective leg, because price will not be printing just because this here is a bullish leg. That doesn't mean that price will be printing bullish candles all the way to the high. No, there will be some retracement, there will be some pauses, some corrections and all of that. So you'll see that price is creating some pullbacks like these. Yeah, just small pullbacks, but these small pullbacks, they are insignificant while marking market structure in True SMC. So that's the reason as to why I'm just using that one. And those small pullbacks are the ones that will literally show us where price will be reversing from. And also those are just internal liquidity. Internal range liquidity. So that internal range liquidity, I believe by now you all know that price is obviously heading for, all right, you see these highs, when you see a swing point, this one here is what we call external liquidity. And also when you see a swing point high, a swing point low, those are external liquidity. This one here is also external liquidity, as well as this one here, external liquidity. There is some liquidity resting below here, and this liquidity is what we call external liquidity. Exactly, there are external liquidity. Same also in a downtrend. On this here, you can clearly see this is external liquidity. Also this one here also is external liquidity, as well as this one here. All right, so now yeah, all of these are external liquidity. You can see the ones that are marking, all of those are external liquidity. All right, now for the internal liquidity, you see the minor pauses that I didn't consider. These minor pauses, you can literally see the ones that I have not considered. Like I said, price will not just be printing the bullish candles all the way to the upside just because it's a bullish leg. It will be forming some minor pullbacks or some pauses inside the trading range, and those pauses, and I said literally in every low of a bullish in every high or low of a valid pullback, there is some liquidity resting above or below it, depending if it's a high or low. And that buy side or sell side liquidity, yeah, that's the liquidity that I'm talking about. And so these minor valid pullbacks that are available on that bullish leg, these are also liquidity. So that's liquidity, and also this is liquidity. So you can see this is what we call internal range liquidity, because our range in this leg starts from here all the way to this up here. So all of these that I was marking is what we call internal range liquidity. Same to this one here. In this impulsive leg, there is some pullbacks or minor pauses, that whatever the name we call, and below these lows there is some liquidity. That sell side liquidity is what we call internal range liquidity. But these massive swing point highs, we see the liquidity resting above these high highs, and these are above these swing points. This buy side liquidity is what we call external liquidity, and the same, the liquidity resting below these lows is what we call This sell side liquidity for these major swing points is what we call the external liquidity, but the liquidity present in the trading range is what we call internal range liquidity. You will come to know most of the this internal range liquidity, they include inducement, engineering liquidity, engineered liquidity, and so on and so forth. So those are internal range liquidity. So also on a downtrend, you can see this is the trading range from that high all the way to this low, and there is some obviously this here is an impulsive leg, like a one impulsive leg, but that doesn't mean that price is forming like bearish candles all the way to the downside, like consecutive bearish candles without forming like minor pauses, or without forming like bullish candles inside there. No, like price will be forming some bullish candles also inside there, even some minor valid pullbacks inside there. So these minor valid pullbacks that price forms, there is some liquidity resting above these highs of these minor valid pullbacks. So this buy side liquidity is what I'm talking about. So this buy side liquidity is what I'm talking about, and that buy side liquidity is the one that is called internal range liquidity. And also, just like I explained on a bullish scenario, the internal range liquidity, it includes the inducement, the engineering liquidity, and yeah, engineered liquidity inside there, and all of that. So that's all about buy side liquidity, sell side liquidity, external liquidity, and internal range liquidity. All right, so now you have, yeah, I also have showcased like an uptrend and downtrend. In an uptrend, price is forming higher highs and higher lows, and also like I'm only considering the legs. All right, there is something that I missed it to say. All right, this one here in an uptrend. All right, I don't want to delete all of this, so let me just erase the noise. Yeah, I think this is good. Right, so in this scenario, you can clearly see that price is forming a higher highs and higher lows. So this, like I said, is an uptrend. So when you see an uptrend, you see this one here, like starting from this low all the way to this high. This is what we call the trading range, or the impulsive leg, or impulsive move. The same after price retraces back into the range, maybe to take out internal range liquidity and also mitigate or fill imbalances of fair value gaps, then reverses back. So price, the cycle is like this. You can see this here is external liquidity. So price retraces back into the range to take out internal range liquidity, and then back again to take out the external range liquidity, again reverses back to take out the internal range liquidity, again reversing back to take out external range liquidity. So you can see the cycle is from the external liquidity, then internal range liquidity, then external range liquidity, and that's the same cycle. Also, you can see price retraces back for internal range liquidity, again after that reverses back for external range liquidity. You can clearly see price reverses back for external range liquidity. Same, this one here is external range liquidity. I said on these swing points, like these highs, there is some buy side liquidity resting above there. Like in every high that you see, there is some buy side liquidity resting there. It's just that some are more significant than others. So in this case, this is significant because this is a swing point high. And I said in every swing, in every high or low, there is some liquidity. Of course, in a high, that's buy side liquidity. And this case, since this here is a major swing point high, that buy side liquidity is what we call external liquidity. So price will return back, retrace back into the previous range, current range, took out the, grab that internal range liquidity and also fill imbalances, then reverse back towards the external liquidity again. Again, the process continues. But now if price now decides to grab, decides to take the internal, grab all of this and also the external range liquidity, and decides to also break past the external range liquidity. Now in this case, now price will be shifting bias from being an uptrend to being a downtrend, and in this case now the price will be in a new trading range, and that range will be starting from this high and then ending at this low I mean, I will not say ending, but we all know when a trading range is, I mean, a swing point low is confirmed, we only confirm a swing point after the inducement is taken out. So it makes sense because this is the inducement and it was taken out. I will not use the word inducement. Let me just say the recent buy side liquidity because this is a downtrend. All right, so this one here is the trading range, ranging above there, and of course ending there, then again starting there, ending there. So you can see the pattern continues. You can see price retraces back, I mean here price retraces back for internal range liquidity, then reversing back for external liquidity, retracing for internal range liquidity, then reversing back for external liquidity. Right, so with this, then you can identify easily that this one here is the impulsive leg and this one here is the corrective leg. So in a bullish scenario, the leg that is aligning with the trend is what we call the impulsive leg, and the leg that is counter trending with the prevailing trend is what we call the corrective leg. So this one here, the one I'm marking, is the impulsive leg because it is aligning with the uptrend, and then this one here is a counter trend, I mean it's counter trending, so that's a corrective leg. This one here is an impulsive leg, and now after price has made a change of character, now this becomes the impulsive leg because we are currently in a downtrend right now. Then this one here, the one that is opposite of the prevailing trend, is what we call the corrective leg. This one here is what we call the impulsive leg, and you can see the process continues and continues. So now I have covered a lot about all of this. Now with this, now I can confidently say that we can now shift into the topic of today, that is inducement. So let me also delete all of this now and yeah, talk about inducement. All right, so I drew a lot of things here. All right, yeah, good, we are done. All right, so like I said, this inducement, the reason here you can clearly see I've written major inducement and also here minor inducement. This means that inducement is divided into two. There is major inducement and minor inducement. So how can we identify that this is a minor inducement, this is a major inducement? All right, we'll get into that, but first let's know what inducement is. Inducement is the, you see, like on the previous session, yeah, yesterday's session, I explained, or let me get into the chat. All right, I'm on this thing. Let me just, I don't want this disturbance. I want to scroll up. All right, so you can see on the previous video, I explained about this, that the recent, while marking structure, and this here is a downtrend. So while marking structure in a downtrend, on that impulsive leg, I explained the corrective and impulsive leg. So on this corrective leg, I mean this corrective leg, what am I talking about? I mean this recent valid pullback. So on this impulsive leg, this first, like let's say the recent valid pullback, there is some liquidity resting above there. That buy side liquidity is the one that we was waiting for price to reverse. I mean the one that we were waiting for price to reverse, grab it, and doesn't matter how much price goes further taking, as long as price has taken out this one here is a confirmed swing point. So in that case, that's when now like we were waiting for only this one. Just like here, you can see this pullback, price retraced back, took out that, I confirmed this as a swing point, and if price reverses and breaks past that, that's a valid break of structure. Same here, the recent valid pullback, the liquidity resting above there, that buy side liquidity is what I was waiting for price to retrace, take it out, and of course this one here is confirmed as a swing point, and if price now reverses and breaks past the swing point, that's a confirmed valid break of structure. So you see this liquidity that we was waiting for price to take out, that's what now we call inducement. And in this case, you will notice that this is different. All right, so let me do that. So you can see like for this one here, this one here occurred before the break of structure. You can clearly see that it occurred before the break of structure, but this one here, it formed, or it was created after price has broke the structure. So this now is actually the difference between the minor inducement and the major inducement. I have defined it practically that buy side liquidity, that recent buy side liquidity that we were waiting price to come back and grab it or take it out, so that we can confirm this low to be a valid, swing point. Then this buy side liquidity, we said that is the one that is called the inducement. Now I said that there is two types of inducement, the minor inducement and the major inducement. And right now I'm actually distinguishing them, that the minor inducement is the one that occurs even though the context is the same. When I say that the context is the same, is that if the recent buy side liquidity that price has taken out to confirm this swing point. So you can clearly see that the context is the same, but now when the pullback is formed, like where the pullback is formed, you can see this pullback is formed before the break of structure, but this one here is formed after the break of structure. So this buy side liquidity of the recent valid pullback high is what we call the minor inducement, and the one that is like the buy side liquidity that is of the valid pullback that is formed after the break of structure, as long as it's the one that is recent, that's major inducement. So that's the two types of inducement, and that's their difference, like how you distinguish between a minor inducement and a major inducement. And you can clearly notice that both of them, they can confirm a valid break of structure, because both of them, they are inducements. So you can clearly see the minor inducement, price reversed, took it out. I confirmed this one here to be a swing point, meaning if price reverses and breaks past the swing point, that's a confirmed break of structure, just like I marked right here. So the same here, you can see price took out the major inducement upon reversing, and this one here I confirmed it as a swing point. And after reversing, all right, the high must be protected, our trading range high, and you can clearly see this didn't made it out to this high. So you can clearly see it reversed, took out the major inducement, and I said it doesn't matter like how much more it takes. We are only interested with this first one, and you can clearly see price has taken that. This here is confirmed to be a swing point. Once price has taken out the inducement, then now once price reverses back, breaking past that swing point, then that will be a valid break of structure. So both of them confirm a valid break of structure, and their difference is that the minor inducement is formed before the break of structure, while the major inducement is formed after the break of structure. All right, so let me get back into the diagram. So right here, you can clearly see the diagram very well. So price has taken out the here. This I use the dollar sign here, but you can clearly see. All right, I cannot say if it's a major or a minor because the previous structure I didn't mark the previous structure in the simple diagram. So let's just assume, because I said either way, the minor or the major, they both confirm a swing point. So it doesn't matter if I marked it or not. So yeah, so this here can be a minor or major inducement. Then you can clearly see price reversed back and took this whatever.
Sir, please
Yes,
on share screen.
is it you only or also the others?
I know I'm seeing.
No, I have a question, sir.
All right, so I think
Uh,
it's a network problem on your side. All right, so right here you can see. All right, let me All right, so this one here is the recent sell side liquidity, and so price retraced back. You can clearly see price retraced back, took out this recent sell side liquidity, which is the inducement, because this is a buying, like this is a bullish scenario. So price took out the inducement, then reversed. So we said once price has taken out the inducement, then this one here is a confirmed swing point, meaning if price now reverses and breaks past the swing point, that's a valid break of structure. So again, right here, price created a valid pullback, and you can clearly see this valid pullback is created after the break of structure. And I say that if the valid pullback is created after the break of structure, and that's the recent valid pullback, all right, price can end up creating another valid pullback here, and this one here will be the inducement. But in this case, marked the I've just marked already, like the one that I'm marking is the one that we will be using it as the recent one. So this one here is the recent pullback, I mean valid pullback. That's a very important keyword, valid, valid pullback, and the sell side liquidity resting below this recently formed valid pullback is what we call major inducement. Why major inducement? Is because it was created after the break of structure. Then if price now reverses and takes out this major inducement, I am not interested how further price retraces more before reversing. I'm only interested with this part that price has grabbed that or has taken out that major inducement. I am already confirming this one here to be a break of structure. This takeout here can be by a week or a candle close. It doesn't matter. The only thing that matters here is here. Even though we don't consider like how far the price continues down, we need to make sure that this previous swing point low is actually protected. All right, then price reverses back and breaks past our confirmed swing point. So that's a valid break of structure. All right, then here we can see this here is the valid pullback, the recent valid pullback, and the sell side liquidity resting below here is what we call the inducement. Now let's identify, is it a major inducement or a minor inducement? Like I said, if it's formed before the break of structure, and you can clearly see that's the break of structure, and this pullback is formed before the break of structure, and that's the reason as to why right here I marked it as minor inducement, because I said if it's formed before the break of structure, it's called the minor inducement. All right, but I said also that it doesn't matter if it's minor or major, both of them confirm the swing point. And yeah, if price now reverses back and takes out the swing point, then that's a confirmed break of structure. All right, price here retraced, took out the inducement right here, and this case is a minor inducement. Then this one is a confirmed swing point. We said both the major and the minor confirm the swing point. And so right now, if price reverses, as long as this low is protected and reverses all the way, breaking past the external liquidity or breaking past this confirmed swing point, then that's a valid break of structure. All right, here you can clearly see that price has done that. This here is the recent valid pullback, and this pullback is formed before the break of structure. You can see the break of structure is here, and this pullback is formed before the break of structure. This sell side liquidity resting below here is what we call the minor inducement. Right, price retraced back all the way until here. You can clearly see now this here is another situation. Price grabbed, like price retraced all the way to this external liquidity, grabbed that liquidity by just a week, like it just swept that liquidity, and then finally continued with this prevailing trend towards breaking past this. All right, so now let me get back here again into this scenario. All right, so right here we can clearly see that price has made that valid break of structure. I said once the inducement is taken out, this swing point is confirmed, right? So that's the case. Then this low is protected. So this means that if price reverses back right now and breaks past this confirmed swing point, then this one here is a valid swing point. All right, so right now, like I can see here, this one here is the recent valid pullback. So the sell side liquidity that is resting below our recent valid pullback is what we call the minor inducement. Why minor inducement? Because this pullback was formed before the breakout structure. You can see this is different from this first scenario where the pullback was formed after price has made or has created that valid breakout structure. So in this scenario, when price has created a minor inducement, the major inducement is actually the external liquidity. So this is very important and you should note this. When there is a minor inducement on the range and price has not, our price has yet created another inducement on the range, like price has yet created a valid inducement after the breakout structure. This means we only have a minor inducement. The major inducement is actually the pullback low or the external liquidity. So that's the reason as to why in this case I will not confirm this one here. So in this case now price will be looking for, so in this case price took out the minor inducement and in additional it took out the major inducement. So price was not satisfied with the all right, so price was not satisfied with the minor inducement and it ended up going further for the major inducement. Why major inducement? I said if it's a like if price has only created, or if in a trading range there is only a minor inducement, then the external liquidity is what we will be calling the major inducement, or the external liquidity is actually the major inducement. And that's the reason as to why I'm not confirming this one here to be a change of character, even though price broke past there with a wick. So this sweep, but now this is very important. If price broke past this here with a candle close, now that's another scenario. If price breaks past that with a candle close, now this, because this here is a major inducement, I mean this external liquidity is the major inducement, but at the same time it is the trading range low. So this means if price breaks past that with a candle close, then that will be a confirmed coach or change of character or bearish breakout structure, or any word we'll be using. So it's a major inducement and at the same time it's a trading range low. So if price breaks there with a candle close, in fact with a displacement, then that's a change of character. But in this scenario, I even tried to just place some kind of like let's align that to represent that is just a wick that dipped down, grabbed that external liquidity or grabbed that major inducement and then reversed back abruptly. So you can clearly see after that. So I will not be confirming this one here to be a change of character, but rather a grab of major inducement. So this one here is a valid swing point, and this became a valid swing point after price has taken out the minor inducement, not after price has taken out the major inducement. Right after price has taken out the minor inducement, that's when this one here becomes the, in this scenario that is, because this here is the minor inducement and it was the first. So this one here was already a confirmed swing point, and then now after price has taken out the major inducement and reversed back, making that breakout structure, that's a valid breakout structure. In fact, in this case, a strong valid breakout structure. Right, then after that, you can clearly see price created a valid pullback after the breakout structure, and that's the recent valid pullback. So the sell side resting below there, that's what we call the major inducement. Why major? Because that pullback was created after price has created a valid break of structure. So that's very important. So that's the reason as to why this here is a major inducement. All right, then in this case, you can clearly see price reversed all the way, took out the major inducement. So this one here is a confirmed swing point. Right now, I was anticipating that price to retrace back for more liquidity and fill the for more internal liquidity, as well as filling the fair value gaps and maybe mitigate some POI before it actually reverses and break past the swing point to continue with the prevailing trend, of which the prevailing trend was an uptrend. But in this case, price did the opposite. You can clearly see price ended up further breaking past the trading range low, and in this case now we are no longer in are bullish, we are now bearish, because this is the first indication that price has shifted bias from being bullish to now being bearish. And I said once price has shifted bias, then the trading range now starts here. So that's the trading range, and obviously the low here. This one is a confirmed swing point because price, you can see price retraced back for internal range liquidity. The internal range liquidity in our case here is the minor inducement. Why minor inducement? It was formed before the change of character. Very, very important. It was formed before the major, before the change of character. So price here swept the major inducement exactly, no, minor, swept the minor inducement exactly right there. So this one here became a confirmed swing point, and you can clearly see price reversed exactly right here and broke past the swing point. So that's a confirmed valid bearish break of structure. Then after that, you can clearly see it created a valid pullback. So the liquidity resting above this valid pullback is what we call buy side liquidity, and that buy side liquidity, since it's the one that, like, it's the recent buy side liquidity, then we'll be calling that major inducement, because we said the recent, like the recent pullback, either low or high, the liquidity resting below there or above there, depending if it's a high or it's a low, that's the inducement. Now you need to differentiate, because all right, you know it's an inducement, but you need to know if it's a minor inducement or it's a major inducement. In this case, it's a major inducement because it was created after price has created that valid break of structure. Then you can clearly see price retraced back and took out the major inducement. Then this means that price has confirmed this one, this low, to be a swing point, as price retraced back and grabbed this. All right, so price retraced back, grabbed that major inducement. All right, maybe it ended up for more, or filling the fair value gaps, mitigating some POI here, and then after that price reversed back all the way down here, breaking past our swing point, confirming a valid break of structure. So you can see now the, like, everything now is easy, the explanation, the everything. So now with this simple diagrammatic representation, then now it will become easier when you get into the charts. It's just that the time is over, but I would have taken some few markings on the real chart also. Maybe tomorrow we'll do that before we dive into the tomorrow session, I believe. All right. In fact, tomorrow is the one that yeah, that's good, because tomorrow it's the pro way of identifying, like, the thing that, not tomorrow, on Friday. We said that Friday will be our resting day. So yeah, where is it? This one here. So the day 4, we are pro way of marking market structure. Exactly, this is the pro way that I showcased. But since tomorrow is a day of its own, not tomorrow, in our next session that will be on Saturday, since it's the pro way of mapping market structure. Now that's when I will be marking market structure just like I did yesterday, but now while using the minor and inducement, like a minor and major inducement terms, like using such terms in marking the market structure, like the pro way of mapping market structure. I'll be doing that tomorrow. All right, so right now I believe this what I've showcased here has given you a solid understanding. I believe with just this you can even mark the pro way of you. With this you can literally get the way that the pro way of marking market structure is actually done. All right, so yeah, I will end the today's session here, and if there is anyone who has a question, now I'll be diving there now for the questions and stuff. So yeah.